Get ready, crypto enthusiasts, because the market is absolutely exploding with action, and you need to know what's happening right now. We're talking about major moves, critical shifts, and predictions that could redefine the game. The pace is relentless, the stakes are sky high, and if you're not plugged in, you're missing out on the biggest stories shaping the future. So buckle up, because Bitcoin Bulletin is dropping the essential intel you can't afford to ignore. First up, we're diving deep into a market that's seeing some serious volatility, with key players making big plays. Get ready for the latest on Bitcoin, Dogecoin, and Solana as we break down whether the current corrections signal a pause or a pivot. Then, we're looking ahead because one expert is calling for a massive surge in Bitcoin's price, but there's a catch, a major hurdle involving some very large holders. Can these whales clear the way for unprecedented gains? You won't want to miss this analysis. Plus, we're heading overseas to see how a pioneering company is doubling down on its Bitcoin strategy, even as its stock price takes a hit. What does this bold move mean for their future and the broader market? And finally, we're examining a potential seismic shift in traditional finance, the impending inclusion of a major strategy into the S&P 500, and what that could mean for Bitcoin's exposure in mainstream portfolios. It's a lot, it's happening fast, and it's all right here, right now. Don't go anywhere. Make sure to hit that like button, subscribe for all the latest updates, and ring that notification bell so you never miss a beat. Market tides shifting. Bitcoin, Dogecoin, Solana surge amidst Ethereum dip. In a dynamic start to the week, major cryptocurrencies are showing upward momentum, mirroring gains in stock futures. Investors are closely watching the ripple effects of a recent appeals court decision that declared President Donald Trump's tariffs unconstitutional, a development that appears to be injecting a dose of optimism across financial markets. Bitcoin, the undisputed leader of the digital asset space, experienced significant oscillation, trading between $107,900 and $109,900 throughout Monday. Notably, its trading volume saw a substantial increase of 32% in the past 24 hours, indicating heightened market interest. Despite this uptick, Bitcoin remains about 12% below its all-time high, a peak reached just 3 weeks prior. The month of August proved challenging for Bitcoin, with a decline of 6.49%, a stark contrast to its historical average gain of 1.14% for the month. Meanwhile, Ethereum experienced a downturn, hitting an intraday low of $4,221, a significant 12.43% drop from its recent highs. Solana, however, bucked the trend among the majors, trading up by 0.89% in the preceding 24 hours. The broader cryptocurrency market saw over $420 million in liquidations over the last day, with a significant portion, nearly $310 million, coming from bullish long positions. Bitcoin's open interest saw a slight increase of 1.39% in the last 24 hours, though it has decreased by 2.49% over the past month. Analysis of the long-short ratio suggests that the majority of Bitcoin derivatives traders were positioned for price gains, even amidst the recent pullback. The overall market sentiment, as measured by the Crypto Fear and Greed Index, remained in the neutral zone. The global cryptocurrency market capitalization stood at a robust $3.78 trillion, marking a 0.47% increase in the last 24 hours. Stock markets also showed signs of life, with futures for the Dow Jones Industrial Average, S&P 500, and Nasdaq 100 all inching higher, signaling a cautiously optimistic outlook as trading resumes after the Labor Day holiday. Analysts from Bitfinex suggest that the market might be nearing the bottom of its current downturn, anticipating a potential return of capital to major cryptocurrencies as September progresses. On-chain analytics firm CryptoQuant further supports this optimistic outlook, indicating that Bitcoin is far from its cycle top. Metrics like the network value to transaction ratio and the market value to realized value remain at levels that historically suggest Bitcoin could be undervalued relative to its network activity, hinting at potential for future growth if demand continues to hold steady. But what does this mean for the immediate future of Bitcoin's price trajectory? We're about to uncover expert predictions that suggest an even more explosive upward movement is on the horizon. Whale Watch. Expert predicts Bitcoin to soar to $150K upon major sell-off completion. Bitcoin is currently navigating a period of consolidation, trading around the $110,000 mark, a notable drop from its recent all-time highs. This price action has led some industry experts to pinpoint the influence of significant market players, often referred to as whales, as a key factor in the current price resistance. The prevailing sentiment among these experts is that once the selling pressure exerted by these large holders subsides, Bitcoin could be poised for a dramatic ascent, with predictions ranging up to $150,000 and even higher. David Bailey, CEO of Bitcoin Nakamoto, recently articulated a bold forecast, suggesting that the primary impediment to Bitcoin reaching $150,000 at this very moment is the activity of just two major whales. Bailey's analysis posits that once these significant liquidations are completed, with one whale reportedly having already sold a substantial portion and another halfway through their sell-off, Bitcoin could embark on an up-only trajectory towards the $150,000 level. Such a surge would represent a substantial 36% increase from current prices, signaling a significant breakout if Bailey's whale theory holds true. The selling pressure from these large holders has, according to this view, created an artificial ceiling, preventing Bitcoin from discovering its true market value. Bailey's thesis is bolstered by recent documented whale transactions that have indeed caused significant market fluctuations. For instance, on August 24th, a single whale offloaded 24,000 BTC, valued at approximately $2.7 billion, triggering a flash crash that led to the liquidation of $500 million in leveraged positions. Furthermore, another whale was observed transferring $4 billion worth of Bitcoin to Ethereum via the hyperliquid exchange, illustrating the significant capital movements by these major players. Complementing this outlook, Fundstrat co-founder Tom Lee maintains an aggressive stance, predicting Bitcoin could reach $200,000 or even $250,000 before the year concludes. Lee's optimism is rooted in a fundamental supply-demand imbalance. With 95% of all Bitcoin already mined and a vast majority of the global population yet to own any, the scarcity factor is immense. His long-term vision is even more ambitious, projecting Bitcoin could hit $1 million over time, potentially matching gold's current market capitalization. Arthur Hayes, co-founder of BitMEX, also supports an aggressive $250,000 target, citing increasing institutional demand and global fiscal expansion as key drivers. He emphasizes Bitcoin's growing role as a macroeconomic asset. Galaxy Digital's Alex Thorne projects Bitcoin to reach between $150,000 and $180,000 by the end of 2025, a sentiment echoed by CEO Mike Novogratz, who sees $150,000 as a realistic target driven by market momentum and favorable macro conditions. While some analysts, like Paul Howard, express a more cautious view due to recent price dips and potential September weakness, the overall consensus among many prominent figures points towards significant upside potential, contingent on the easing of whale-induced selling pressure. These predictions paint a picture of substantial potential gains, but what about companies actively building their Bitcoin reserves? We're now turning our attention to a fascinating corporate strategy involving significant Bitcoin accumulation and its impact on the market. Metaplanet's bold Bitcoin gamble. 6% dividend, preferred shares issued to fuel BTC flywheel amid stock slump. Metaplanet, a company that has dramatically pivoted from its origins as a hotel operator to become a prominent proxy for Bitcoin investment, has successfully garnered shareholder approval for a significant capital-raising initiative. The company plans to issue preferred shares that could potentially raise up to $555 billion, approximately $3.8 billion USD, specifically to bolster its Bitcoin accumulation strategy. This move comes at a critical juncture, as Metaplanet's stock price has experienced a considerable decline of 54% since mid-June. This drop has directly impacted its proprietary flywheel strategy, a self-sustaining model where increasing share prices incentivize a key investor, Evo Fund, to convert warrants into shares, thereby generating capital for further Bitcoin purchases. The recent shareholder meeting, held in Tokyo, saw the approval of a proposal to issue up to 555 million preferred shares. These shares are designed to act as a defensive measure, allowing the company to infuse capital without further diluting its common shareholders, especially if the stock price continues its downward trend. The preferred shares are expected to carry an annual dividend of up to 6% and are initially capped at 25% of the firm's total Bitcoin holdings. This structure is particularly aimed at attracting Japanese investors who are seeking yield in an environment characterized by persistently low interest rates. Despite the volatility in its stock price, Metaplanet has continued its aggressive Bitcoin acquisition strategy. The company recently purchased an additional 1,009 BTC for approximately $112.2 million, bringing its total Bitcoin holdings to an impressive 20,000 BTC. This accumulation positions Metaplanet as the sixth-largest public company globally in terms of Bitcoin treasury holdings, now surpassing entities like Riot Platforms. The company has ambitious targets, aiming to increase its holdings to 100,000 BTC by the end of 2026 and a staggering 210,000 BTC by 2027. However, the recent stock performance has cast a shadow over the company's capital-raising model. With its market value now roughly double the value of its Bitcoin holdings, a significant compression from the 8 times premium observed in June, analysts have voiced concerns. According to Eric Benoist, an analyst at Natixis, the Bitcoin premium is a crucial element for the strategy's success. A shrinking premium, he warns, directly diminishes the company's ability to accumulate Bitcoin on favorable terms, potentially leading to reduced investor interest and a further decline in stock value. On a positive note, Metaplanet's inclusion in the FTSE Japan Index is seen as a significant milestone, bolstering its standing in the burgeoning sector of corporate Bitcoin treasury strategies. Adding to the company's high-profile backing, Eric Trump, appointed as a strategic advisor in March 2025, attended the shareholder meeting. He publicly endorsed Metaplanet's CEO, Simon Jurovich, drawing parallels to Michael Saylor and affirming the company's mission to pioneer a new credit theory in Japan centered on digital assets. This high-profile involvement underscores the growing international recognition and interest in corporate adoption of Bitcoin treasury strategies. This corporate focus on Bitcoin highlights a broader trend of digital asset integration into traditional finance. Now, let's explore how a major index inclusion could dramatically reshape Bitcoin's place in mainstream investment portfolios. S&P 500 contemplation. Strategy's impending inclusion and its potential impact on Bitcoin exposure. The traditional financial markets are abuzz with speculation surrounding the potential inclusion of a significant strategy into the prestigious S&P 500 index. This development, if it materializes, could represent a pivotal moment for how Bitcoin exposure is integrated into mainstream investment portfolios. While the specifics of the strategy are not detailed in the provided information, its potential entry into the S&P 500 signals a growing acceptance and integration of innovative financial approaches within the established market framework. The S&P 500 serves as a benchmark for a vast swathe of the U.S. equity market, and the inclusion of any new component, particularly one that might be linked to or influenced by digital assets, could have far-reaching implications. For investors who traditionally allocate capital to index funds or ETFs tracking the S&P 500, this could inadvertently increase their exposure to Bitcoin or related financial instruments. This indirect exposure might appeal to a broader range of investors who are keen to participate in the digital asset market, but are hesitant to engage directly due to regulatory concerns, technical complexities, or perceived risks. The move could democratize access to Bitcoin-related gains, making it more accessible to a wider audience. Furthermore, the inclusion could lend greater legitimacy and stability to strategies associated with Bitcoin, potentially attracting more institutional capital. As more traditional financial vehicles incorporate digital asset exposure, the lines between traditional finance and the burgeoning crypto market continue to blur. This trend could accelerate the mainstream adoption of cryptocurrencies, driving demand and potentially influencing price action. Analysts are closely monitoring the criteria for S&P 500 inclusion, seeking to understand how this particular strategy fits within the index's established parameters. The performance, liquidity, and market capitalization of the strategy will undoubtedly be under intense scrutiny. The implications extend beyond mere investment allocation. It could also influence regulatory perspectives and the development of financial products. As the financial landscape evolves, the integration of digital assets into traditional indices like the S&P 500 appears to be an increasingly probable future, marking a significant evolution in the way investors access and interact with the digital economy. This potential shift in traditional finance underscores the growing influence of digital assets. But before we wrap up, let's quickly recap the biggest stories that have dominated the headlines today. All right, let's do a lightning-fast recap. Bitcoin, Dogecoin, and Solana are on the rise while Ethereum dips, but analysts see Bitcoin's growth potential remaining strong. Experts are predicting Bitcoin could hit $150,000, possibly even higher, once major whale sell-offs conclude. Metaplanet is issuing preferred shares to fund its Bitcoin accumulation strategy despite a stock price drop, aiming for massive BTC holdings. And finally, a potential S&P 500 inclusion could significantly boost Bitcoin's exposure in traditional portfolios. That's all the essential intel for today. Don't forget to smash that like button, subscribe to Bitcoin Bulletin for continuous updates, and hit the notification bell so you're always in the loop. Follow us on all social platforms to stay connected. We'll see you in the next one.